Hello, welcome to the podcast, Master of General Knowledge. This is Andy, your host. Thanks for joining me today. Visit us at www.masterofgeneralknowledge.com to leave comments, messages, suggestions for our shows. We appreciate that. Today I'm going to talk a bit about being an independent contractor versus an employee. In today's world, it's my understanding that, these Amazon delivery drivers and FedEx contract drivers, Uber, so forth, are all classified as independent contractors. Myself, as an insurance adjusting professional, I'm an independent contractor working for third-party companies that work for the large carriers. So I'm an independent contractor myself in that respect. Many years ago, it seemed much harder for companies, employers, to classify their workers as independent contractors. I think the bar was set much higher. It seems to have been lowered quite a bit. So now many of these companies can hire individuals as independent contractors, relieving them of many of the responsibilities of an employer. So let's talk about, what it means in layman's terms. There are business professionals and tax professionals out there, lawyers, attorneys, certified public accountants that have much better understanding of this than myself. They're the ones to guide you through this process. My perspective and opinions today are really based on my own experiences as an independent business person. Going back in my history a little bit to set some groundwork, my first legitimate work as an independent contractor began in the early 1980s. I was in the movie business working as a stuntman and a stunt coordinator. Shortly after that stint, I formed my first partnership in a contracting business with another fellow. And by 1994, that partnership had dissolved and I'd moved on my own and started a corporation. So I think 1994 was the first year I incorporated a business. That business is still going today. So that's just an interesting personal story. And over the years, I've formed many limited liability companies, or LLCs, which is a form of corporation. And my main income currently with Composet Products, LLC, I formed that company in 2012 as a limited liability company. So I have some experience in my 40 years in the workforce. I've also worked as an employee for many, many years in different capacities. So I have both experience as an employee and as an independent contractor. And that's what this podcast hopes to do, is share my experiences with you so you can better understand what your position is as an independent. This will be a basic presentation to kind of separate the two different classifications of workers. There's two main topics to discuss, and the first is taxation and the second is liability. These are the two legal definitions that really apply the differences between employee and employer. On the IRS side, the way you report your taxes is going to change, and so forth. If you're an employee working by the hour or salary, your employer sends a W4 form to both you and the IRS that reports your wages paid by that company, how much you've earned and how much has been withheld from your paycheck for your share of Social Security and your income tax and so forth. If you are an independent contractor, the company or person you did the work for most likely will be sending you what's called a 1099 form. And this shows the gross revenue that you received for your work, typically not including any withholding for taxes or Social Security. So you get the 1099 form and it shows what you were paid for your work less any, not withholding taxes included. We'll get more into details in that when we talk about the taxation side. Let's jump to the liability issue and kind of cover that briefly. Typically, if you are an employee, the employer that you work for holds a much bigger responsibility in the fitness of the product or the service being provided. You're simply working on behalf of your employer. The employer is the company that holds the liability for their work. When you become an independent contractor, much of that liability is pushed onto you. This is one of the benefits of a company having independent contractors over employees. The independent contractor assumes some liability in the product or service, and if something goes wrong, the independent contractor can also be sued. So being an independent contractor, you have to protect yourself from this exposure. There's a couple ways to do that. One is via insurance, and the second is by incorporating and operating as a business, which shields you from some of that liability. On the basic, premise of the whole situation, as an independent contractor, you are basically operating your own business. You're not receiving taxed wages from an employer. As an employee, you are generating untaxed revenue. And to determine how much taxable income you're generating from your business, you have to determine your profit and loss. So you're going to have revenue and expenses. The resulting is either a profit or a loss from the business operations. And the difference is if you're an independent contractor as a sole proprietor, typically working under your Social Security number as your identifier to the IRS. But there's other entities called a corporation or a limited liability company, which is a form of corporation. But the basic premise is you're going to take the revenue that you've generated, being reported to you and the IRS on the 1099 form. You're going to subtract your allowable expenses from that revenue, and the resulting number is either a profit or a loss. What can you deduct as expenses? These are things that as an employee you don't, because typically the company you're working for is providing these requirements. But as an independent contractor, you're doing them, providing them for yourself. So you probably have general liability insurance, professional liability insurance, travel expenses, gasoline, use of your auto, tools, office equipment, your phone, your internet connection, your computer. You could have meals to be expensed as you're traveling. You could be paying rent on a building or an office. There's trade shows, continuing education. I mean, the list of potential expenses as an independent contractor is pretty long. Not all of them will be allowed as legitimate expenses via the IRS's, rules and regulations. And so typically, I have a rule of thumb. If you're an independent contractor, you need to charge 3 times the rate that you would be paid as an employee. So let's just say that, I'm an independent insurance adjuster, and if I was on staff somewhere, I might make $1,000 a week. Let's call it $50,000 a year. So I'm making $1,000 a week reported to me on my W4, or W2 form. And out of that $1,000, they're deducting my withholding taxes and so forth. So if I work 40 hours, my basic wage rate is $25 an hour. 40 hours times 25, $1,000 for the week. If I start doing this work as an independent contractor rather than an employee, my rule of thumb is I'll have to charge, $75 an hour, 3 times my employee rate to generate suitable revenue to cover my expenses and a good profit for my work. Many times, though, these companies are looking at the naivety of us as workers, not knowing all these facts, and they'll, let's say, double it. Hey, you're making $25 an hour on salary. How about we give you $50 an hour? You take your work home with you, and you become an independent contractor. Well, geez, I doubled my rate of pay. That's great. Well, that's barely going to cover your expenses. So, the number really needs to be $75 an hour. But the reason they're offering you $50 an hour is because they have bean counters in place who have calculated that, hey, if we convert our employees to independent contractors, here's the number we can do it at and make ourselves even more profit, pushing these expenses that you might not be aware of or these liabilities upon you as an independent. So that's my rule of thumb. 3 times your wage is what you should be charging as an independent. There are benefits to being an independent contractor that are sort of intangible and not dollarized. I mean, you can have more flexibility in your life. You can, set your own time and schedule potentially. You might even be able to negotiate your own rates or work for a fixed fee that if you're very efficient and you're quick at your work, you do a good job, you're frugal with expenses, you might even take that, $75 an hour and be earning $100 or $150 or $200 an hour. So there is, the opportunity, if the situation is right, for hard workers who are efficient and do a good job and are diligent and to earn even a larger return, basically paying yourself way more than you could have earned as an employee. And there's a few other things. Let's think, if you're an independent contractor, self-employed, you have your own business, you might have to take a trip to Florida to cultivate new business or maybe attend a trade show. Possibly you're going to need to take some, prospective clients on golf outings or to lunch. So there's some benefits because those would be expensible deductions as long as they're performed in the work of the business. And this is where, even like large companies or people with big companies might even have a vacation home that is owned by the business where they can do, training sessions or, using the property for company outings and things. And so that vacation home owned by the business is actually, deductible against expenses, against revenue, an expense against revenue. As I mentioned before, I'm not a professional in this business of taxation and business structure. There's plenty of people there who can help you. And that's where you should go to get answers on what, the correct structure is for you and what, expenses are allowed and how to file your taxes. Let's talk a little bit about the liability aspect. As an independent contractor, you may be much more exposed to being sued personally for your behavior and actions and the work that you perform. So there's professional insurance for people like, insurance adjusters, architects, engineers, attorneys, and that's basically called an errors and omission policy. If you grossly incorrectly calculate the cost of a loss for someone on an insurance claim, they could sue you for, incompetence, basically. And so that's what an errors and omission policy would cover you for. And then there's general liability. You're walking down the street and on the job doing it as an independent thing, or in your own car as an Uber driver. It's your personal car, and you run into somebody. Uber as a independent, hiring you as an independent, their liability is somewhat limited if you do something foolish and cause a problem. So, your insurance for liability, especially if you're using your own equipment, your own car, your own home in the operation of your business, there's a lot of questions that need to be answered as far as exposure and coverage that you necessarily don't have when you're an employee. So it's fairly complex. These are things that you need to think about when, accepting a role as an independent contractor. Now, when it comes to taxes, the IRS looks at you somewhat differently than as an employee. Now, you have a 1040, that's typically the tax that everybody reports their income to, and your taxes figured from there that you owe. As a business, you can come about this 2 ways. You can, if you are what's called a sole proprietor, basically working off your Social Security number, you would use Schedule C, which will capture your revenue as an independent and then your allowable expenses from there, which would then show you a profit or loss, and then you would report that profit or loss from the Schedule C onto your 1040 and be taxed accordingly. Or if not, the loss would come off your any other revenue or wages that you had earned. The Schedule C will also take you to some other directions like the Schedule SE, which is your self-employment tax. You have to remember that if you're an employee, one of the withholding taxes is your federal, Social Security tax. You contribute 7.5% of your wage to the federal government's Social Security program, and your employer contributes 7.5% of your wage, for a total of 15% of the value of your employee wage going to Social Security. Well, you're on the hook for the whole 15% as being self-employed. So there's no employer contributing the other 7.5%. You have to. So that, when you fill out the Schedule C, you're going to find that there's some side paths that you go down that have other expenses or deductions and requirements. Now, the other option is to becoming a business entity, typically a corporation or a limited liability company, also known as an LLC. The benefit of being incorporated or having an LLC is that the judicial system and the courts recognize a corporation and an LLC as being the same rights as a person, basically. It separates you personally from your business actions and assigns the business actions to the corporation or the LLC. This limits your liability for your, let's say, your personal assets are shielded from actions of the corporation, and therefore you have some protection. Now, the corporate shield, as they call it, can be penetrated in certain ways, and your negligence comes into that play. But basically, having a corporation or an LLC formation allows you to separate your personal assets and personal life from the business. The business acts as another individual person who's paying you for your own work. Typically, that is reported also to your 1040 form through different taxation process. On the topic of taxation, there's an important nuance to understand, and that is the difference between double taxation and pass-through income. If you form an LLC or a corporation, in theory, the corporation, an LLC, pays income tax on the profits of the company. And then the profits of the company, after it's taxed, gets forwarded to you and shows up on your 1040 as income that you'll then be taxed on. So the business is the profits of the business are essentially taxed twice. Once is the corporate tax, and then secondly, the income tax that the profits showed up to you as on your 1040. Now, the IRS recognizes this, and so they've provided an opportunity to create what is called a pass-through income. When you form an LLC or a corporation, you have the opportunity to file with the IRS for recognition as a subchapter S corporation or LLC. And what this subchapter S designation does, it allows the corporate profits to flow to you directly without being taxed and applied to your income on your 1040 and then taxed as your income. So it's an important nuance to know that really the subchapter S designation is fairly critical for the tax advantages of having pass-through or flow-through income, and you're not double taxed. So that's something that you have to take into account when forming an LLC or a corporation, and have your tax professional or your attorney file for that designation. You can do it yourself. Again, there's some pitfalls, but it's critically important to know that you really want to have that subchapter S designation. But again, the bottom line is you're generating revenue and you have expenses to go against that revenue. And the revenue minus expenses is your profit, of which you're going to be, paid and taxed upon. So limiting, your profitability is somewhat important. It lowers your taxation rate. So making sure you capture all the allowable expenses is critically important. Now you can kind of see maybe why employers generally favor the independent contractor model over having employees. It limits their liability. It limits their financial contribution. They don't have to worry about all the rules and laws and regulations and compliances and human resource issues that might come up, and puts a lot of this on you as the independent contractor. Again, my rule of thumb is triple your employee wage as the rate you need as an employer, as an independent contractor. But at the end of the day, the best place to find more information on this is just a podcast with some basic information, and I'm certainly not a tax or a business structure expert, but a certified public accountant or tax professional has those answers, and a business attorney is the place to go to get answers on the legal structure and the formation and the way with which you'll operate your company or your business. But these people are not cheap. Most of them are independent contractors themselves operating their own business, and you can expect to shell out, a couple $1,000s for help at least in these directions. These guys are charging $200 to $300 an hour. They figured this out and they know what their time is worth. Lastly, self-study. You can figure this out on your own. It is not extremely difficult. There are some pitfalls, but there's a lot of self-help books, a lot of other ways to get information. Ideally at the end of the day, hopefully you're earning enough money that you can hire these guys to do this, taxation reporting and liability coverage, hire them to do it, and then you just focus on what you're good at. But that's the basic info I'm sharing with you today. I appreciate, sitting here with me as we go through this. Hopefully it's helpful. Andy, your host for Master of General Knowledge podcast. Reach us at www.masterofgeneralknowledge.com. Thanks very much.